Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, where we did see some red today as the market awaits Powell later this week. What do you think, Ed?
Yeah, the Fed, the volume was really light, so we're still just sort of in a little bit range bound, pulling back. So probably should be cautious on that. We do want to look at a few things on the positive side. This pullback is allowing a handle to form on Apple, and there's still some EV plays, or at least EV suppliers, including Livent and Axcelis.
Yeah, we'll check in on those charts. But first, let's take a look at the major indexes. The NASDAQ today closing flat, just fractionally lower. We also had the Dow down about 0.5% to lead the losses today. The S&P 500 down some 0.2%, and the Russell 2000 up about 0.4% for the day. So continuing to see a pullback here, but not in the brutal way that we saw in yesterday's session, Ed.
Yeah, so I mean, we still hit resistance today at the 21-day line, so there's that issue. Right now we're sort of in a pullback within a rally within a long downtrend. So in the very short run, you can make up all sorts of arguments, but you really just have to wait to see what the market does. It seems like, right now the market has been pulling back. We're all waiting on Powell's speech on Friday. You can see that the volume has been drying up. Even yesterday's pullback sell-off, pretty sharp, but it was a really light volume. Today, I think the volume was even lighter. So it's just a situation. Nobody really wants to make big bets, and I think that's probably what investors should be doing, not really adding exposure, maybe thinking about pulling back here and there, waiting to see what Powell has to say.
Yeah, there are some pockets of strength still, and we'll take a look at some setups because, as you mentioned, this is allowing the opportunity for some stocks to either shape the right side of their bases, maybe ones that were extended to start pulling back and form handles. But also, what pullbacks do is help you figure out who those potential leaders are. What are those stocks that are withstanding the downdraft? So does it feel, like we have a couple more leaders right now, Ed, versus, earlier this year when we were really taking a beating in the market? It was not really clear that there was much leadership outside of energy. Are we seeing a repeat of earlier in the year, or are we seeing more leadership right now?
There's a little more leadership, and the thing is, there's also a lot of potential leadership. There's a lot of other things that we're not going to get, but like steel stocks or commodity plays, a lot of it is like if we have a little bit more strength, that'll be positive. But we still see a lot of sector rotation. I mean, drugs were stock and we're doing really well, and then now energy's up, but then natural gas reversed today. So it's not easy, and it's not like a safe, stable, broad uptrend that you can easily make money in. It's definitely one to be nimble in.
No doubt. Okay, let's take a look at the S&P 500 as well here, continuing to pull back after hitting resistance right at that 200-day line and at a declining tops trend line as well. The S&P underneath those highs from late May, early June, in addition to below the 21-day, Ed.
Yeah, so there's all sorts of things that it's like, again, it's not surprising we're seeing the rally pause. And just the question is, now how do you respond? It's sort of like in a movie, it's always a positive. There's a challenge and the hero struggles for a while and then comes back. But this is not necessarily a movie. We don't know if it comes right back or if it, or when or how quickly it'll come back. So we're getting a test, and we just don't know how this next chapter will be.
Okay, and let's take a look at the Dow as well. Along with the Russell, got above the 200-day briefly, but turning tail. And similar story here, below the 21-day and its highs from a couple of months ago. A quick check-in on the Russell 2000. Similar picture here, although it did manage to gain for the day and right around its highs from early June there. And we also want to take a look at, speaking of energy, let's take a look at the Xle Etf, a strong day. As a reminder, pretty big weightings in Xle for Chevron and Exxon, making up a lot of the weighting there, but up 3.6% today. So really starting to see energy stocks come on in a pretty big way, even though there are still those divergences within that broader energy sector.
Yeah, and still can see a lot of big daily swings. As Xle suggests, a lot of the oil stocks and energy plays have already made some moves from some early entries. So not sure how many will be ready there, but it's definitely strong action, certainly, especially in the oil names.
Mm-hmm. But let's take a look at UNG, a proxy for natural gas here, reversing lower today by a pretty significant amount, over 5%. But there's been a strong advance for UNG since July. So, a downside reversal, outside day, never fun to see. But we've seen a pretty big move here over the last, month and a half or so.
Yeah, this is one reason why you want to try to get early entries so you don't have the situation where you get shaken out. There was some news, a big LNG facility pushed back, it's reopened. It's not going to happen until maybe early mid-November, a month or so later than hoped. So that means there's more natural gas will just stay at home, lowering prices. So a lot of natural gas plays fell today. Not all of them, a few of them benefited, but yeah, the trend has been really strong in nat gas.
Well, let's take a look at XME, the metals and mining ETF here, up about 2.5% on the day. So it was a couple of weeks ago that we saw this area of the market breaking a downtrend. And now after a run up since those early July lows, pulling back, maybe we're going to start to see a little bit more of a comeback here for metals and mining stocks that it sounded like. Steel, an area of interest. Your take on what we're seeing here?
Yeah, there's a few names. I'm thinking about Commercial Metals, Steel Dynamics, a few of them that are looking interesting. But this is the potential leadership that we're talking about. You can sort of see it's coming up, but will it really move? So if things, so that's the situation. We could easily see the market fading, and all of a sudden it rolls over below the 200 a day, and we stop talking about these plays. But this plays, the fertilizer plays, a lot of agriculture plays, they're coming back, and it's just a question: will they really push through and make a new run?
Mm-hmm. Well, we always want to stay on top of industry group and sector rotation. So good to check in on what this group is doing. Let's also take a look at the 10-year Treasury yield. Here's 0TNX getting back above that 3% mark on the yield for the second session in a row after a big pop at the end of last week.
Yeah, it was interesting. This one got basically hit session highs, then came down below 3% briefly on some weak economic data. A lot of not major reports, but a whole smattering of sort of quiet second-tier reports that didn't look good, but it bounced right back. So continuing to trend higher. This is a negative for the stock market. I mean, you have it's just you can always just withstand a day or two, or maybe a little bit, but as you can see, we're sort of moving towards the highest in over a month. This is a big reason why the market's coming under, because they're concerned about more Fed rate hikes. So this is why we're worried about Powell's speech. It could be a big mover either way.
Exactly. Yeah, a pretty notable inverse relationship here. So one that we will continue to stay on top of as the week unfolds. And now let's take a look at Apple, AAPL, which offered an early entry for aggressive investors when it got back above its 200-day line on earnings in late July. We did see above average volume on that move, and our own Harold Morris was taking action at that time. But if you missed that early entry, Apple stock, Ed, looked like it quickly became extended, even though it was on the verge of topping a trend line. I think important to put that into context of where the stock is trading in relation to those moving averages. That day that it topped that trend line, it closed over 16% above the 50-day line. So it makes sense here for Apple to pull in a little bit, form a handle, and it could, we'll have to see, but it could get support right around that 21-day.
Yeah, so this has been the mega cap that's performing the best by far. The RS line has been hitting new highs along the way. It needs one more day technically to have a handle on a daily chart. Technically on a weekly chart, it already has a handle. It's not going to show up on Market Smith because this is sort of an odd consolidation, but they did fall last week and it's continuing to fall this week. So there is a buy point there. I mean, it wouldn't be the worst thing if it fell a little bit more, maybe, but because it's not that big of a handle for that consolidation. But definitely coming up, the moving averages are starting to catch up, could still use some more time. If this one wanted to go sideways for a couple of weeks, wouldn't be the worst thing in the world so it wouldn't look so extended.
And while Apple does look arguably the best out of the mega cap tech area, and we do have an RS line blue dot, what are your thoughts on the fundamentals here, Ed? I mean, that seems like the one yellow flag here, or at least the one that is glaring for me. But can it continue to show that relative outperformance even with, somewhat lackluster fundamentals?
I mean, I think that's a question. This is not a roaring growth stock. It's not even it's not even the growth levels a lot of the defensive growth names we've been looking at. Like, this is no Hershey. This is no Eli Lilly kind of thing, or maybe it is a Lilly. But so that is an issue. The PE ratio is more reflective of that. So I think this is not one that's probably going to be a massive winner when you look back at the big winner if there's a rally. But this one could be a solid performer. But I think that is very, very relevant that this is not going to be a massive growth behind it.
All right. Well, we'll have to see. We'll set our alerts. Maybe if not that handle high on the 17th of August, maybe if it continues to trade around this 21-day line, we get a reversal. Maybe that'll present a slightly earlier entry than that handle entry there. And next, let's take a look at LTHM and EV play here in the specialty chemicals group. So we had, speaking of a reversal at the 21-day line, that's exactly what Livent did in Monday's session and adding on to the gains today. But we didn't see above average volume here.
Yeah, and that's a little bit of an issue here because you could almost argue this was actionable, depending if you drew a line, like a downslope in the handle, get that early entry type of situation. So it's right on that situation where you're going to be actionable or just any strength. But the lack of volume is noticeable given that we had 2 high volume days on the downside. One of them was SQM, and obviously there was market sell-off on Friday. So that's an issue. These lithium plays are a little bit of hot potatoes, and they're a little bit tricky at times. You'd think that strong demand and really high pricing, there wouldn't be these big volatile swings necessarily because all the time, but that is definitely something in there, something to watch. It is still a fair amount above its moving averages as well, though it's paused a little bit here. But so this would be aggressive for sure. But this is an area the EV suppliers seem to be doing better than a lot of the actual EV stocks.
Yeah, and we definitely have the story here in spades with the lithium mining. So there's a lot of interesting things about this, and it does have periods where it does go on those sort of high octane growthy moves, but it seems like, Ed, with the hot potato nature in the group, and maybe pivoting leadership, Albemarle looking pretty good. SQM had a brief, very strong move ahead of the earnings report. So is the strategy here, well, you got to be willing to be aggressive and know what you own, the volatility of these, but also going with maybe a shorter term mindset. If you are trying to get a move out of these, maybe don't overstay your welcome.
Yeah, or certainly you might want to take some partial profits fairly quickly. I think that's been a good rule throughout 2022. You could also look at an ETF, LIT. That's more than just lithium, but that has some lithium plays, including Albemarle. It has Tesla. It has a bunch of battery makers. So that one, but that's still volatile too. So it's not like you're going to be like calm with that with this ETF, but that's one way to try to get, company specific risk out. But these stocks tend to move quite a bit together. Yeah. So I'm not sure if that'll provide much protection, but shorter span is not a bad strategy at all.
All right, and let's also take a look at ACLS, a semi-equipment stock that it looks like it is seeing that volatility contraction VCP that Mark Minervini likes to talk about as it tightens up here in a handle, a strong move that it had from a little over 46 to just about 80 in a couple short weeks here. So can we see a semi-equipment stock performing well when we're seeing a number, not all, but a number of the former semi leaders not looking so hot?
Yeah, this one's definitely in a different space kind of thing. It has a lot of exposure to the EV market. So several chip plays that are in that space are doing well. But yeah, there is some declining volatility and has found support at the 21-day line. This is definitely something that, so maybe it'll break higher, but it could also break lower. I think you definitely want to wait for that kind of move and hopefully in higher volume. You can see the volume is drying up. So, can you see a nice, powerful move higher out of that going higher? This was our new America, the last week. So you can read about this company. You can look at the fundamentals. They've been pretty strong lately. So there's a lot of positives. Like, yeah, Livent and Axcelis definitely have the earnings, at least recently, in a way that Apple does not. So this is a little different. This is why you have to look under it, because I was like, what is Axcelis? Why is it doing so well? And so I was very glad that New America came a couple of days later to explain more about it. I would suggest because it is a ways away from that handle buy point, you probably would want an early entry. You probably would want to try to get it relatively early, because if you buy it around 80, that would seem a pretty big run in that way. And of course, we then get pretty grossly extended from its 50-day and 200-day lines as well.
Yeah, and some resistance there right at that round number. All right, Ed, thank you so much for your analysis today, and to everyone for tuning in. We will be back with more tomorrow morning on IBD Live, so make sure you tune in, investors.com/IBD Live for all the details. We will see you there, and we'll see you right back here tomorrow after the close.